Hey, good morning, everybody. It is morning here in California anyway. And, as I look at my wall of clocks, I see that we've got people that are from all over the world with us on this morning. And we want to thank everybody for being here. And, I see that here in LA, it's 10 o'clock, New York, 1 o'clock in the afternoon. London is 6 p.m. So thank you for you guys that are on from there. Frankfurt 7, and hey, Tokyo and Sydney is already in tomorrow. So those of you that stay up and watch our webinar, we certainly appreciate it. My name's Rob, and I'm going to kick this off. So could somebody give me a sound check? Make sure that you can hear me okay. Just type a Y in the box if you could for me, the chat. Okay, very good. Randy, you're always quick on the draw there. We appreciate it. So good. So let me kick things off. As I said, we're all of us are in the California Pacific Daylight Savings Time, and so today what we're going to do is we're going to be doing this pretty much the same thing. We're going to be going through the volatility report, and Wade and Shane are going to do that a little bit different than what we've done it in the past. So I think you guys will enjoy that. And then I want to make sure that you remember that if you want a currency pair reviewed, make sure that you give us the currency pair and then just give us the multiple time frames. So whatever you're using for your directional bias, let us know that time frame and then also your entry time frame. And then we can get to it. We'll be able to review it. And remember, if you can't or we don't get to that, you can always send it in to support@tradeats.com and they'll help you out there. That also brings me to another point. For those of you that are new with us, we want to make sure that if you have any technical questions, make sure you send those into support@tradeats.com to get your technical support there. We want to kind of keep this webinar to teaching and looking at currency pairs. We're going to be going somewhere between an hour and an hour and a half. We'll just kind of see how much the boys start ranting here as we go along. So I think that pretty much covers everything. So what we're going to do is instead of just turning it over to Shane to do the volatility report, we're going to go ahead and have Wade and Shane talk to you about the volatility report. So why don't you guys take it away?
All righty, thanks, Dad. Appreciate it. Shane, you with me here?
Yep, here I am. So I wanted to, normally we would be going through the volatility report, but as I'm sure a lot of you know, we did not do one yesterday because of Memorial Day for the United States. And when Memorial Day comes, it usually tends to be a little bit of a slower day. So, just to ensure that it was as accurate as possible throughout the rest of the week, we held off on doing it till today. So what we wanted to do was something a little bit differently. We thought we would go through and every Monday, me and Wade will go through and take a look at all of the pairs, and then we'll write them down, and then we'll kind of revisit all of them and decide what to feature on the volatility report. So we thought that we would do that live right now. We tried to mostly not look at all of the pairs just so we can kind of give more of an accurate way of how we go through it, having not seen all of them. So yeah, we just wanted to go through and do kind of a candid, this is how we come up with it, and also why things don't make the cut and all of that stuff. So we're just going to be going through all of the pairs and just talking about what we see on all of them. So Wade, do you have anything you want to add?
No, that's pretty much it. Like Shane said, we normally just kind of go through a kind of a filter process on we just narrow it down and down and down until we find, basically the 2 or 3 best, setup, best, pairs that we think are worth featuring. So, I figured this is going to be kind of a candid conversation between me and him, going through those pairs, and you can kind of, see how we go through that process. And ultimately, the lesson here for you guys is breaking down the kind of the mindset of finding something that's getting ready to be tradable rather than something that is already, the trade's gone. It's already left the bus station, you missed it. That's really where we want to get you guys. I always talk about being aggressive but close to the expansion line. That's really where you want to start trading. And that's really what this process is all about. So anyway, hopefully you guys get something from that. And we've never done this before, so forgive us if it may be a little bit confusing sometimes or something. So we're just gonna kind of go through it and see what happens, and then we will get to your guys' questions as soon as we're done. And we can answer the questions you guys have. And like my dad said, if you guys have a couple pairs you want us to look at, we'll probably get into that and just do some Q&A when we're done here. And that's pretty much it. So that being said, Shane, why don't we go ahead and let's start filtering down and find which ones that we like.
All right, cool. So, and one other thing that I wanted to add, just something that I'm hoping people get out of this. Remember that we're going to do this on a little bit higher time frames, but if I were to go ahead and hide that this is a weekly, daily, and 4-hour chart, you could pretty much swap these out with any time frame. So the same going through and just looking at your pairs in the morning on your smaller time frames, if you're not trading quite this quite this high up, it is still going to be very similar to this. All the same things apply, where you can look at it and be like, oh, this is starting to get interesting. So anyways, that being said, we're just going to kind of work through all this. We normally don't get into the exotic pairs, as I'm sure you guys know, so we're just going to work our way down to gold, and then we'll go from there. So to kick it off, I've got the weekly, daily, and 4-hour chart on pound dollar. Now, pound dollar was actually featured on the last volatility report, so it's kind of already broken out of the daily box. It's setting up a little bit better on the weekly now because we're coming up to that weekly expansion line. I made a note on the last volatility report that we were getting a little bit of a reaction right here to this previous expansion line. So it looks like we're rolling off of that. We just recently had a big run up this morning. I would not feature it right now. It was already on last week, and it's already, had a pretty good amount of movement. So this would not make the cut for what the report that's going to be sent out later on today.
The only thing I see on this one, Shane, the pound USD is like the daily. The daily is different. It's a more advanced setup because the daily is close to that last expansion level. So there is something to be paying attention to on that. But the weekly is probably the most interesting thing about this pair right now, is that the weekly is getting up and it's setting up close to that expansion. So we may. I don't know if we want to feature that. I don't really like to feature the weekly time frame too much on the volatility report, just because it is, you got to remember, if you're getting a breakout on the weekly, it's going to take, it could take 2, 3, 4, 5 weeks for it to really start moving. The move is coming. It's for sure coming. But we just have a lot of traders that just they're typically trading in and out of the London, New York sessions mostly. So it's something to be aware of, but for you guys that are trading on a long term, then that weekly definitely looks interesting. So, and Shane, I don't know if you want to write down the weekly on here just for review later, and we'll just have to see what else looks good. But we can maybe put pound USD weekly for consideration if we want to feature that, if there's nothing better.
Yeah, if it comes up and tests that expansion, that'll get really interesting. Anyways, let's jump into euro dollar, see what's going on with that guy.
Like that weekly on euro dollar, that's getting ready to do something. Okay.
Yeah, so inside of the box on euro dollar, this would pretty much not make the cut. We've already moved quite a ways from the previous box, but we're still inside of the range. This would not make the cut right now.
No, but that probably, that weekly, when you're in a box, right now it's you're not going to trade it, but as soon as it breaks that box on the weekly time frame, again, this is going to be another big runner on the weekly time frame. I would give it, a month, possibly, maybe shorter, maybe two to 3 weeks, and this thing's going to be probably in a significant trend on the weekly time frame. So this is, this one's good for later on, but that's the warning signals that you're in the box. But yeah, let's move on.
All right, move on to dollar franc.
Interesting. Another box on the weekly. You can see that consolidation on the daily, man. That thing's getting tight.
Yeah, this is pretty much stay away. Although we did have a little bit of a reaction right here, but I do get a lot of questions like, how come this pair wasn't featured on the volatility report? It looks like it just broke out of the box. If it's on a week or inside of a weekly box, but we just broke out on the daily, it's pretty much not going to make the cut. There's so many pairs that aren't or that are out of the box and moving that there's not really a whole lot of reason to feature something that's not as good as it can be. So.
Yeah, it's interesting. Again, this is another one, you know, give this one 3-4 weeks and then it's probably gonna be interesting. So not today though. Interesting weekly right there on dollar yen. I like that. Lot of stuff happening on the weekly. If you guys see, there's a theme running through here so far that the weekly pairs are possibly, you know, we're setting up. So if you guys are having trouble trading in and out of the sessions on some of these major pairs, you guys are knowing it's going back. If the weekly's in a box, it's going to mean some pretty choppy movement on the lower time frames and not a whole lot of trend follow through. So it kind of starts with that top down analysis from the higher time frames. The daily, I don't see. Well,
Having a
I,
little
I,
bit of a reaction to this expansion line. So we know that it's going to come up there and then we get a reaction at that level and then it'll kick long or kick short off of that.
yeah, I think just I don't know if this is worth being on the volatility report this week, but it is an interesting thing with that daily, that last daily, the actual box, and where price is basically sitting on that expansion line. That's a dividing point. Depending on what happens at that price level is going to tell you the future of those two green weekly candles. And the question on this pair is, are those going to stay long and break through the expansion on the weekly, or are they going to rotate off short? And if those things rotate short, you're probably headed for a significant down run. But right now, that daily is kind of at a decision point. I would probably wait for the daily to form another box though, and then get that expansion on the daily before we feature it. But this again, interesting stuff. This we could very well, next week's volatility report could be much more interesting just from what I'm seeing on the higher time frames. But anyway, let's move on.
So yeah, that one would not make the cut. So Euro franc just broke out of a weekly box. If we that probably would not make the cut right there.
Yeah, no.
It just broke out of a 4
Weekly's
hour.
getting interesting. Again, this one again is probably for the weekly. You know, I would note this one down, Shanks. I don't know. I haven't seen anything interesting on the daily, so it may be longer time frames that are featured this week. But you know, that weekly is, you know, I don't know about that. You know, it's starting, but again, it could be the move could still be 3 weeks out possibly.
Yeah, and if you guys can't see, there's a theme going that most of them are not going to make the cut. All right, so moving on to Euro Pound. So Euro Pound, the only interesting things that I see going on here, it would not make the cut because we are already way extended away from the daily box.
Yeah, I don't see anything here. This is, I mean, there might be a possible mean reversion trade coming on the daily, coming back to expansion, but that's not the simple signal that we're looking for.
Yeah, we had a little bit of a reaction to this 4 hour average price, so it broke out and then we retested the average price line and now we're starting to go down short, but we took out that liquidity line and yeah, that trade's pretty much missed to get the best entry. There could be something else if you wanted to test it a little bit later on the 4 hour with like a 15-minute for entry, but as of right now, that one's actually, I'm going to pull up the 4 hour and the 15. We'll just take a look at it real quick. So 4 hour and 15, let's see if there's an entry into this. So we had this reaction right here where it pushed down and pulled back. So the only thing through here, we had a good reaction to this expansion line where we kept on kicking off it, then rose above it and did not take out the liquidity line. That could have been a signal right there as it started pulling back to get into a trade and set your stop right above that liquidity line. Because the whole idea would be that it's not taking out that liquidity. If it's not taking out that, it's probably going to take out the other side. And you have very clear risk at that point. And it was above your entry expansion. So that would be something that you're looking for. And it was out of the box at that point. So anyways, that one was.
It shows the power of being close to the expansion on the 4 hour. You know, that's really the situation we're looking for. It's mostly the daily. You guys see, we're looking mostly at like the day. We're trying to find those setups on the daily because it's going to be the most relevant to most of the people trading, you know, this methodology. So
Yeah, a good daily turns into a good few sessions. So let's go ahead and move on to Euro Yen.
yeah, the daily, if you find something that's fresh out of the box on the daily, you're talking about, you know, 2, maybe 3 days tops before it, you know, starts making significant moves. And that's when we're trying to spot something that's going to be a mover through the week. Then that's really where the daily becomes kind of the sweet spot in forecasting, you know, 3, 4, 5 days. So anyway, that's why we're typically looking at that. The weekly, I see it's going into more of the. It has a master cycle there, weaving back and forth past that last box. Has swing high, swing low. That's interesting, but this thing's pretty far gone too. I mean, for you know, referencing that last box, it is holding the average price. So if you have a rotation short off that, that might be interesting. But again, weekly time frame. These things, you know, they need significant time to play out when you start getting up in those time frames.
Yeah, what we were talking about, this box right here, we broke out long, expand high. We actually did have a rotation off of this expansion line, push down, expand low, past the bottom of the box. Now we're coming back up and we're retesting that original expansion line where the move started. And this was, you know, several months ago. So this is playing out on a longer time frame. But you know, you can always, once you see a clear reaction to that line, you can always test a trade on it.
Yeah.
So
And so
nothing on.
there's always on any pair you can come up with some sort of consensus, but what we're trying to do on the volatility report is find something that's, you know, typically on those lower time frames that's going to move, you know, pretty fast. This is there's a setup here, but and a possibility to test a trade, but it's probably not going to fit most people's time frames. So like I said, that's the reason why we'll probably pass on that one. Pound franc looks pretty far gone. I think that there's nothing here right now, at least on the weekly.
Yep, agreed. Pound yen. So pound yen, we broke out. See, I would see something like that and just kind of ignore it. That's so choppy. That looks like a way to get beat up.
that weekly's gonna be is headed for a box, is what it looks like.
Yeah, we had a little bit of a reaction back here, broke the low, and then came back up into this overall range. Yeah, even if this went into a box right here, and then just broke out, it might not even make the cut, just seeing how, you know, whippy this is through here. We want nice, smooth runs.
Yeah.
So anyways, all right, nothing on pound yen. Let's move to dollar CAD.
Oh, CAD.
That looks nice. That is a nice rotation. So we stayed underneath, kind of respected this expansion line all through here, then formed another box, whipped up and rotated off of expansion.
Yeah, this one's good. I would be careful with it. Probably the next, you know, you're definitely short. You're breaking out on the weekly. So this is definitely starting to move. However, because you are breaking out on the weekly, kind of simultaneous with the daily, you could trade it. I'd stay short for momentum purposes, but just, you know, keep in mind that we could, if that weekly runs out of gas, you'll see that on the daily first, and you'll see it on the 4 hour. But we could be headed back up to the weekly expansion. So that would be kind of just a scenario to take into consideration. Trading this pair, and realistically, the best timing on this was not today. This one actually was yesterday. it's kind of already, on the daily, that was ideal on the daily, 2 days ago, or probably Friday of last week.
Yeah, that one's a little bit far gone, and definitely don't get in right now.
Yeah, but it's moving and it's showing momentum. So you can just go with the classic momentum trading strategy on the lower time frames. But the weekly, I don't know if this qualifies, because if let's just put it this way, if it was at that first green candle, then that would have been more interesting to talk about for sure. Now it's already moving, so it might not be the best, but we'll see. There's not a whole lot.
Yeah, this would be a case where I see this one and just jump into the next one. There's nothing, it's already too far gone.
Yeah, I don't see anything there. Ooh, that weekly looks good on that. I like that. This one may be good because we have the clear reaction on the weekly. We've expanded high on that daily box. We've shown some aggression through that. Because you're seeing that clear reaction on the weekly shows that we could pretty easily have a decent series of down days on the daily in line with the weekly. So I think this one may be a good option actually.
Yeah, so that would be a situation where I take a note and kind of revisit
This
a
is
little later.
This one, I would see the daily, and we'll put a picture of the weekly showing that clear rotation and risk management or directional bias is contingent on staying below the last expansion line on the daily. In my opinion, that's probably where it'd be.
Yeah, so this one is still inside of the range here. I'll tell you what I would probably write for this one when it's going up. I would write just broke out of the daily box. We had a reaction to the previous expansion line at 1.53089, and we're starting to run short. So as long as it stays underneath this expansion, but mostly it needs to stay underneath the low of this box, this would be short. So it's not a good entry right now, obviously, but when you get a solid reaction to a daily expansion line like we got here, I mean, that could be several days of just running in one direction. So that would be a situation. Yeah, this one is probably going to make the cut because that looks pretty good at this point. And we finally had, I believe that this pair made the cut before because it broke out of a daily expansion, but then we see that it ended up just being inside of a weekly contraction and finally broke out of that. So now it's really starting to open up. So this is a good option right here.
You guys, and think about this, just a note for everyone listening. If you're seeing that kind of price action on the weekly where you broke out, you're holding, you're seeing the clear settling point on the expansion line. What does that mean for the daily? If the weekly is showing movement, it's showing behavior that is understandable, that means it's going to send the daily flying. It's the daily's going to move because the weekly is, you almost want to jump in short on that weekly if you were trading, just almost based on that. So now if you reverse engineer into that trade possibility or trading idea on that daily chart, now you can see why there's a good chance that we're going to keep pushing short. Now, just because we're feeling that way does not mean you just jump in now. Now you want to look to your lower time frames. You have an expectation that this week on EuroCAD is probably going to be predominantly short. Is it 100% going to be that way? No, nothing's 100%, but there's a good possibility it's going short, and you just got to manage your risk in line with that. But I think the probability is that we're going to move, and we're going to probably move short on this one. But either way, manage your risk.
Yeah,
Okay.
so again, this one would make the cut with a short bias. It's a little bit further gone than we would like because it's moved away, but it's the daily charts. We still have some good stuff ahead of us. So let's go ahead and move on to Frank Yen. All right, so that's a good sign. So we pushed away, came back, and reacted to the previous daily expansion line. I'm not crazy about how the weekly looks at this point, but that's a hard signal to ignore, just the reaction that we had right there. So this would probably make the cut of the volatility report, mentioned that it's a little bit choppy through here, through the weekly, but probably say, long bias, contingent on staying above that, but you would really want to see it stay above the top of the box. We'd pretty much have to be breaking through these highs, the previous highs, prominent highs.
This is a good one. And if you're looking at basically just based on the weekly chart, the weekly is green, right? So that's a very simple observation. But when you get the daily, it comes down and tests the expansion line right there, and it gets rejected to the long side off that expansion. Excuse me. What that's doing is that's confirming the idea that the weekly is going to keep going long. That's giving you a pretty clear signal there. So this one's definitely worth featuring just for the sake of that things are lining up and the clues are working out in the favor of the long direction. So I think that's probably a winner. You got that one written
We've
down.
had a few rotations off of daily average price lines through here. So we had one here, and then we had, like a week or so of movement to the long side, and then we had another one right here, rotation, and then we had, even longer time frame of just short after these rotations. So these are always ideal, what you want to see on your larger time frames to kind of help you figure out what the overall direction is going to be.
Oh.
I'm looking at a comment here from Bill. So his question: should you buy near expansion line as much as possible to get the best price, or wait till it breaks the expansion box range? So so this is assuming that we're outside of the contraction and we're now in the expansion phase. You want to, one, you want to wait to have an idea of what your directional bias is going to be. If it breaks out and just barely, pops through the high of the box when it initially breaks out, you do want to, you want to give it a little bit of time to clear up a little bit as to what the direction is going to be. What's so great about these rotations off of the average price line is it's a very cut and dry, buy orders are being protected, stay long for further notice, and you can manage your risk. Now, you might not be able to manage your risk at this point, so we're quite a ways away from that expansion line on the daily chart. So you probably wouldn't want to manage your risk off that. But if we jump over to the smaller time frames, there's going to be new expansion lines that have been created up along the way that you can manage your risk off of. So if you can get into this and you want to, if you're looking at this when the price comes down and then starts pulling up and you're real close to that, yeah, you can manage your risk off of it. But at this point, it's, like I said, it's probably too far gone. So anyways, let's go ahead and move on. We still got quite a few of these to get through. And I think you guys are mostly getting the point of this, of what we're looking at. That's another great example right there. So nice little rotation. The only problem with this is that it's been a fairly whippy pair leading up to it. I mean, just looking at that weekly, I might actually not feature that one. It has had a reaction, but the weekly does not look good.
This one's interesting. It's for momentum. The daily's kind of, it's starting to move already. But there, if you're one of your pairs is CAD Frank, if you're trading the 15 into the 4 hour or the 5 into the hour, but pretty much if the hour goes long or the 4 hour goes long, I'd probably pay attention to those to see if you don't get some momentum that gets established, just based on the daily setting up into the week. Because if the daily holds in the week, then it's all the smaller time frames are going to follow suit. So anyway, it's interesting, but I think I kind of like the other ones that we've gone through already. So this one's probably not as good as the other ones.
Yeah, okay, so let's go ahead and move into CAD yen, and this one's already not in the running.
Yeah, next.
Yep. So Aussie dollar. I don't like that we didn't have a super clear reaction to the expansion lines. We've had, two pairs now that have had a real clean bounce off of it.
Yeah, I mean, it is getting a reaction. It is in the direction of the weekly. And there, that weekly looks like it could be headed for like 100% retracement of that pop down. And if that's the case, I mean, we're going up to the expansion on the weekly. So if you're trading, if Aussie USD is one of your pairs that you're trading, I would definitely stay long because the momentum is lined up. And that's it, but I don't know, like I think those other pairs are probably a little bit better at this point. It has ran up quite a bit so far.
Yeah, and just to be clear on this, this is not saying that these pairs are untradeable. They just don't make the cut for the volatility report, which the volatility report means that, okay, this thing is, you have the chance to be at the very beginning of the move versus, look at how much Aussie yen, or excuse me, Aussie dollar already pushed. So there's still movement to be had in this, but, obviously you're not getting in at the turn. That's what the volatility report's about. And then that can also be translated into the smaller time frames. So, if you see like a 4-hour chart, you're using that as your directional bias, and you see that you just broke out of the 4-hour chart, and then you want to test a trade. We see the 4-hour right here just broke out. We did have a test right there, so you would have managed your risk if you were in it short initially, and then we came up long, but we knew that we were going into new volume because we broke out of the 4-hour expansion. So all the same lessons kind of apply to all time frames. But anyways, just wanted to preface that a little bit. Let's move on to New Zealand dollar.
This one's starting to get a little bit of momentum, looks like.
I probably wouldn't feature this. We've had some nice reactions to the expansion lines, but just box after box after box, and it's already a little bit too far gone for me. Kind of interesting. So we broke long, or broke short, broke long, and then came back, and you can see that we pushed through the expansion, breathed back, and held above that right there. So we can see, yeah, that if you were looking at that, that could have been a way to manage risk on it.
Yeah,
but either way, not make the cut.
If NZD USD is one of your guys' pairs, recommendation, I would just stay long on your shorter time frames, your hour, your 4-hour as your directional bias. If it goes short, I probably wouldn't pay as much attention to the short side, but the long side, I would stay long on this because this could actually, it's like I said, it's probably not going to make the cut for the volatility report, but momentum is in alignment going long, and it very well could turn into a decent move. So, like I said, like Shane said, it's not that it's not tradable. It's just we're looking for things that are a little bit earlier than that.
Exactly. All right. Pound Aussie. Pound Aussie's been really frustrating because it's got such good movement. This thing is just stacking candles to the short side, but it hasn't formed a box, so I can't really feature it.
Yeah, that's the one thing, is that sometimes when you lack new architecture on the chart, it just keeps going and going and going. There's probably a lot of opportunities on the smaller time frames, like the 15-minute and the 5-minute, but for finding something that's in a move on the daily, you guys see the theme. It's like we're looking for some sort of recent box, some sort of architecture that you can manage the long versus the short side on. And this, obviously, anybody could look at that daily. I mean, that thing is, if you're going short right now, you may get a little pop, but obviously you guys can see that this is the chances of a long pullback are increasingly, going up. So, it's not something that I'd recommend jumping in on, but you guys would do whatever you want. But nothing here, Shane. Let's go to the next one.
Yeah, well, we had on the smaller time frames, we did have a little bit of a reaction right there, pushed out of the 4-hour and then rotated off of that. So that could have been a way to manage your entry, but you start getting real nervous when it, if you're depending on it to set, new lows for the last few weeks in order to pull a profit, that starts getting a little tricky. And then one other thing that I wanted to bring up, I always get emails where it's talking about, price just broke straight out of the box. There's no entry into it. It just started running. So normally when that happens, just to address, I think I've addressed this before, but if it just breaks straight out of a box, it's because the entry had already happened. And I understand this is a weekly chart, but you know, the same kind of thing applies to some of the smaller time frames. If it ever breaks straight out of a box like we see here, one, the entry probably already happened, which we can see it did way back here, pulled short, rotated off of expansion, and then started running long. And also, you don't have the full story of that box, which we can see here. You know, that thing was rocketing up long and then just completely turned, and now we're headed through the other side. So anyways, just wanted to throw those 2 points out there.
Shane, I'm going to answer a quick question that came in from Abe. Abe, thanks for the question. The question is, says, hi Wade, love ATS so far. Quick question, when trading the 15-minute chart, what's the better supporting time frame, 4-hour or the daily? Abe, if you're going to trade the 15-minute chart, what's an initial pairing with that is the 4 hours far enough away that it's actually going to hold stability. So usually we default 15 into the 4 hour. It's, again, you could do whatever you want, but that's kind of the general recommendation. But one thing that you can do if you're looking for just a little extra confidence in the 4 hour, because remember, if you're trading a 15, that's just your tool for entry. Well, you're trading the 4 hour. You're basically betting on the 4 hours and have follow through. And if it's short, you know that the next candle is going to be red, or if it's long, the next candle is going to be green. So if you don't feel that good about the 4 hour by itself, something to think about. But what you can do is trade the 15 into the 4 hour. But if you want a little extra boost in confidence, is you can look at the 4 hour into the daily, and you can use pairs that are closer together to confirm momentum and follow through. But you wouldn't want to trade the 4 hour into the daily because that's too close. So because by the time the 4 hour looks like it's setting up, since it's so close to the daily, it could be turning the daily, make you second guess. So, but if you're looking for the follow through on the 4 hour, take a look at the daily as well, but use the 15-minute as entry is a pretty good setup if you want to go 3 time frames on it. Okay.
All right, Aussie Frank, that one is still pretty similar to I don't remember what other Aussie pair it was, but
so we got Shane, I'm going to address a comment that just came through. And I'm sorry if I don't say your name right. We got people from all over the world with different names, and I have trouble speaking English, so and that's my language. But I think it's Tajinder Pal. Hopefully, I apologize if I didn't say that right. It says we're not showing lower time frame entries. Can you at least discuss 2 trades on lower time frame based on high time frame box? We go through lots of lower time frame entries on our other webinars. We're switching it up right now just because we normally have sent the volatility report out already. And I'm sure we'll get to some of that here once we're done. We'll probably go through a few more pairs on the lower time frames, but for you guys that want more understanding of the thought process for understanding how to analyze lower time frame charts with the higher time frame, we go through that on almost every webinar to some degree. So feel free to go through the archives that are in the classroom, and I guarantee there will be some content on that you'll probably get some insight from.
all right, so Aussie Frank, this one would be close. I don't like the way that it looks. We're already, you know, past the recent high. This one feels like it's already a little bit too far gone. So I would probably not feature this since we already broke past that recent high.
If you're trading it, it is getting, you know, you're getting good alignment to the long side. But it is, you know, I'd just say stay long if you're trading it on the lower time frames, because it is lined up with the weekly. There's pretty classic trend that's happening, but not fresh enough for a volatility report. So just while you're switching, Shane, we got another question from Hakeem. It says, is 1 hour support and 15-minute entry all right to utilize? So you're talking about 1 hour supporting time frame entering on the 15. Again, it kind of goes with what I just said. Again, you guys could do whatever you want, you know, but the recommendation, just my opinion, is a 15 is too close to the 1 hour. So by the time you get under expansion or above expansion pullback on your 15-minute, it's going to drag the hour around with it typically, and you're going to feel like the hours rotated. The whole point of the higher time frame is stability. So if you get too close on your entry time frame to your supporting time frame, then essentially you're looking at one chart. You're not getting the benefit of the stability of the higher time frame. So, I would probably suggest not doing that. Now, 5 minute into a 1 hour, there's enough separation there. Got a lot of people that trade 5 into the 1 hour. Guys that have been with me for years and years and years are, that's 5 into the 1 hour is their go-to. But it's up to you. But if you're doing the 15, I would say stick with the 4 hour, and then if you want to back the 4 hour up with the daily, that can be helpful.
Okay, so let's try and get through the rest of these real quick. This one would not make the cut. We're already too far away from the line. I'm going to try and speed it up here so we can move on to some more Q&A. That one would almost have made the cut, but we're already up above the high, so I probably would not recommend that one. Whoops. Again. Yeah, that's
Nothing there.
great pair. I think that we featured this when it was rotating right here because of it rotating off of that expansion line, and I'm pretty sure it had a long bias if that's how it looks. So yeah, that's the power of these daily rotations. You catch one of those and then you have the opportunity to get in going long. Now, did you ride it this far? Probably not, but at least you have the opportunity to get in something like that. And again, just bringing it back over, the same exact thing applies on your smaller time frames. Maybe it won't play out over days and days and days, but you want to get in near those expansion lines and make your decisions from there, because that's kind of where the market's opening up. So anyways, let's go ahead and move on to Aussie New Zealand. This one is retesting it. I don't know when I'm going to release the volatility report a little bit later on. I'd like to see a little bit more develop from that one.
Yeah, I'd like to see the candle go green, or at least start to show some more significant rotation on the long side. But the weeklies also, you see how small that weekly candle is. So that shows we could be headed into a sideways market. And if that's the case, if we're going sideways on the weekly, then that means that the daily is probably not going to turn into much.
I would actually, for this pair, I don't know if it's, I put it on the volatility report, but I would actually make a note for myself to go and check back up on this pair, just because weekly, a reaction to the weekly coming up, pulling back off of it, we're getting, we're starting to play around this daily expansion line that could be set up well at some point here in the not too distant future. So I would make a note for myself to go back and check on that. All right, let's move on to New Zealand CAD. This would not make the cut. There are way too many boxes in here. It's a lot of wicks. That looks like a really good way to get beat up. So yeah, I would not feature that.
So we got a question that came in here from Everett. Says, how do you determine what currency pair makes the cut? I don't know if you've been on, Everett, but we've been kind of talking about that this whole time. So I don't know if you got on late or when you came on the webinar, but what we're looking for is something that's close to expansion on usually the daily and sometimes a weekly chart. We're looking for something that's fresh out of a box and showing clear rotating behavior off of the expansion line or in and around that. And then we're going to size up the higher time frame to see how we feel about that on the weekly. And he asked a question, we haven't talked about the monthly. This is all, everything we're talking about here is relevant to any time frame. So, it's all the same type of price action that'll help you come up with trading ideas and forecasts. But the reason why we don't really talk about the monthly too much is that we don't have a whole lot of traders that use the monthly as a directional bias. Most are going to be, in the weekly and daily range, trying to figure out what's the move of the week going to be, and then trade that on a daily basis. So it's not that it's not relevant on the monthly, it's just for the majority of the subscribers, this is going to be more relevant information. So that's why we stick to these time frames.
Yeah, so this pound New Zealand, we just broke out of the weekly. I don't really particularly like featuring pairs that just broke out of the weekly as, you know, the first or second candle, just because it's going to go on a little bit longer and give us more to work with. So anyways, yeah, pound New Zealand would not make the cut here. Euro NZD, I think we featured this not too long ago. This one definitely started whipping back and forth. So yeah, again, would not make the cut. Yeah, we're already too far gone out of that daily box. It looks like it's really starting to open up though. So there could be some good trading in here, but it just wouldn't make the cut of the volatility report to get you in at the very, very beginning of a potential trade.
Yeah.
I actually do remember this got featured after this rotation. This got featured with a short directional bias when it broke out of this daily box. So it got a little wasn't too great down here, but yeah, that's the power of staying, you know, in line with those daily expansion lines. So now, final one, we'll go ahead and jump into gold, which we did feature right around here when we were getting a reaction to this daily average price line. So that pushed up quite a ways, took out this liquidity line. Yeah, now it looks like we're starting to pull back off of that. So if this continues short and breaks through this expansion line, we'd definitely be looking for it to head and probably take out some of this liquidity, at least clear that, you know, the bottom of the box, and then we'll see if it starts going through the whips of pushing the highs and lows at that point.
Yeah.
So as of this moment, the only thing I've got written down is Euro CAD. So I'm going to go ahead and jump back over to that. So also one thing I want you guys to keep in mind is we normally do this at the end of session so that it has a little bit of time or a little bit later on in the day, at least for us, because things are kind of at a standstill, and then we can, you know, help forecast the rest of the week. So this is not the normal, you know, for it's 10:50 in the morning for us here in California. So this isn't, you know, the normal setup that we've got. So anyways, EuroCAD, this is the one that made the cut as of right now.
Yeah, the only reason this one's making the cut though, because typically that daily doesn't look that great as it sets, but because it has the alignment with the weekly and we have a significant rotation on the weekly is the only reason why the daily would be making the cut. So that it has to, it's a combination between the daily and the weekly. That signal is kind of pushing it over the top to where like, okay, we're going to pay attention to the short side of this market for sure.
Yeah, it looks like we haven't had a whole lot of entries. So
This is if it's going to move on the weekly, then this is just the initial leg. Like you're going to have to wait for some more architecture and things to form, but coming into tomorrow, you know, Wednesday through Friday, on the 15-minute, they're, you know, providing that it holds on the short in line with the weekly, which is where the probability is visually at this point, that, you know, you should get, you know, probably several entry opportunities on the 15-minute. So this is a good pair to monitor on the short side for the remainder of the week, is just kind of the general recommendation. Of course, the market can do anything that it wants, but we do have, you know, there's enough reason here to keep this one at the forefront if it's one of your pairs that you're trading for sure.
yeah, and that pretty much wraps it up for now. That's you know, I didn't expect that we would do the volatility report while we're doing this, but that's just kind of the thought process that we wanted to share with you guys on how we decided, because I know a lot of you guys find it useful and want to be able to do it yourself. So that's, anyways, yeah, if you have any other questions about it, feel free to type them in, but that's pretty much it. We'll probably jump over to Q&A. So I'm going to take off my screen and pass it over to Wade, and we're going to be addressing some of the questions that have come through.
All right, sounds good. Let me give me a few seconds to switch over, guys. Okay, so, okay, hopefully everyone can see my screen, should be up and ready to go. Okay, so we had a couple of requests to look at some lower time frame pairs. I think from Samuel here, I see Samuel, you're looking at the 4-hour and the 15. You said Euro USD, but then you said, sorry, Euro CAD. So I think I'm going to look at Euro CAD for you. Okay, switch to the 15. And so we'll look at the daily here. So EuroCAD obviously is starting to push down here, but the 4-hour, this thing, it's pretty far gone at the moment. But again, I think you want to wait to, you're going to have to wait for some more architecture on the lower time frames just so you can manage your risk properly. Oh, and this is one way that we've been talking about for the setup short. Yeah, you want to this one, you just want to stay on the short side. So that's we're gonna have to, you have to wait for some more setup on the 15, but I think that this could possibly definitely, you could have a good week with this one. But when the only way you'd be looking to enter on this is if you sold it short, if this candle turned red and took a momentum trade short in line with that, which you could do. But if you're going to do that, you need to manage your risk basically, at the highs of these candles, because the worst case, if it doesn't play out, it's probably coming back to the expansion right here. And so that's kind of your risk. You're not going to really find out any new information about the trade until you get up to this line and get a rejection or some sort of price action that's telling of what's going to happen on the higher time frames. So anyway, I'd be careful with that one. Okay, we'll look at Euro Yen on the daily 4-hour and 15-minute for Tom. Let's see here. Find it. There we are. Okay, so on the daily, we're definitely going long. We're green. We're above expansion, so momentum is definitely to the long side at this moment. So let's look at the 4-hour. Okay, so if you look at the daily, we knew the daily was going long, right? But if the 4-hour, this framework is going to tell us what's inside that daily. And right now, you can see that we're making moves up to this expansion. If we start getting above this expansion, that means that daily is probably going to release and start going long. It's not just going to be a quick turn up and then a pop back to the short side. But right now we're at that decision point. So right now, you're long on the 4-hour, going off the basic strategy. Everything's long, and that's why right now you're built below expansion. You're getting turned. It's going up long. Right now, if you're in a long trade, the opportunity was right here at the turn. You should be in the money on that opportunity. But right here is this is the decision point. If we get up to this expansion line and you get rejected, or we hold below and it's not making any progress, then that's a clue that we could be headed to going red on this 4-hour. And if we go red on the 4-hour, then we may be holding this expansion, and then the daily is not going to show it's not going to have its continuation possibly. So you're going to get the information relevant to this trade at these lines, and it's going to tell you pretty much the future of what's going to happen. You just need to pay attention to the signals. But if you're doing the basic strategy, you're below expansion, rotation here, it's putting you into the money, it's giving you options, and it really at the end of the day just comes down to having a strong position in trend, and that's how you're going to get that long over here, long on the daily, under expansion, counter trend liquidity, go long, see what happens. If this doesn't go your way, I'd probably, because it's already started to pop, we popped above these highs of these two candles here, I probably wouldn't ride it much more than right here, negative. I wouldn't wait till it gets back to this expansion line. There's no sense, especially if you're in the money on the trade. If it doesn't start performing pretty much right now and just keep continuing, there's no sense in taking a big loss. You're going to take a lot of break evens trading this, and that's what we call it's just exploratory trades. You're trying to figure out the trend. and it has the option. It's either going to perform or it's not. And you have the decision points you got to pay attention to. So, if this doesn't go, if it's not showing some aggressive movement, getting up through this expansion level and then up to this liquidity line and then up to here, once you get through the expansion, then you're in profit territory. Now it's up to you to see how long can you hold in. We're just trying to get you from the turn to here. So you have that calculated initial risk to reward ratio to start with. Whether you want to take it or not is up to you. But that's where it starts. And then the progression, you got to ask yourself, what if this trade is going to work out? What needs to happen generally in order for it to really, turn into a good winner? And you can pretty much come up with the general behavior that has to happen. So again, needs to get up through this line and then keep moving. So
I wanted to add in on that. Yeah, just to make it clear, that was an entry right there. A lot of people need just or want a little bit more insight about an entry. If we had jumped on this about 45 minutes ago, right at that rotation, so 2 green candles, we had a pullback below our entry time frame expansion, and we're in a clear move up long. The one thing that's against us here is that we're coming up to that 4-hour expansion line, which we know that price will breathe when it reaches those points. So, which is kind of what it's going through right now. But above expansion on our higher time frame, we still want to go long. And then on the opposite side of our most recent expansion line on our entry time frame, that's probably the most overlooked thing. I'll get a lot of screenshots of folks going in when they'll be buying above expansion on their entry time frame. You want it to be opposite on your entry. So you want to buy below expansion on your entry time frame, just to make that clear. So that was an entry right there about 45 minutes back. As soon as we got that pullback and then it started turning green, we had one confirming candle. You could have tested it right there and just managed your risk at the low, but one confirming candle and then 2 green candles, and take a trade right there and manage your risk, roughly around that low. And then be expecting it to go back to the expansion line. So that's the whole idea. And if you can stick to getting in on the opposite side of your expansion lines, your entries are going to be so much better. Then you can potentially take a profit on a trade that didn't really work out. It'll, by default, your entries will be so much better.
Yeah, you got going back, and we've covered this a million times. Maybe not a million, but we've covered it a lot. On the last previous webinars, but remember, the expansions are the decision point. Okay, what we're doing is we're looking for a stable direction. Like there's no guessing here. Like it's green, it's going up, it's above expansion. This is like a caveman can tell you long, price go long. There it is. So it doesn't take too much overanalyzation to figure out where the momentum is and if it's established. But what we're looking for is when you get a box like this, you gotta think of like these boxes as like little explosions that have been set, like a little charge in the market, right? And when you see the box, you think, okay, someone just lit the fuse, and then when they break out, that's when they go boom, and they're either gonna blow up going up or blow up going down. And what we're doing is by figuring out a clear consensus on the higher direction, we just expect they're going to blow up in that same direction. So that's the importance of finding a stable higher time frame. And then we know that whether it's going to go long or short, this is the decision point. So even in a situation where if you're broke out long, right here, the minute you get here's that explosion starting, boom, see how it comes down and tests that line. If you wanted to, you can still go long in here in line with your overall direction, because this is the tipping point right here. So you can go long if you want to and manage your risk. It all comes down to managing your risk in and around the expansion lines. So when you're up here or you're up here, you can see that the last expansion line is down here. So you're basically just jumping in and trying to just grab something out of thin air rather than having a hard level you can manage the decision point from. So that's pretty much how we think about it. Again, you got here's a box, that's the charge, someone set it, someone lights the fuse, boom, it blows up. Now it's whipping around. It has all that volatility that comes into the market. if the facts are, when you get that explosion out of the box, this is going to tell you where the trend is, where it's likely to explode to. Let's go back here when we had this other big move coming up right here. We had an explosion on the higher time frame, boom, right? Okay, now it's where's it going to go? Where, boom, it explodes high, right? That's why on the volatility report, we look for something close that's in this neighborhood. This is where you want to get interested, not up here. You want to get interested in and around these. That's when the new explosion comes in, right? So here it is. You got it going up long. As it goes up long, here's your boxes. Boom, boom, boom. But you stay long. Why you stay long? Because you're long up here. So long, long, long. Because there's the chances are these boxes, the explosions, if you will, out of these boxes are going to end up settling to the long side. So that's the whole reason buying below expansion. This is a sucker's move right here. It's a sucker's move that people are going to jump in short because the predominant, the wave, the C is flowing long. And then you're timing it with the volatility of the expansion on the lower time frame. So what you're doing is essentially when you have this long trade and you get a box, you could say that the deviation from this box is probably going to be long. And you know that when you see the box. Is it for sure? No, nothing is for sure. But you know if you can identify a stable trend on the long time frame, there's a good chance that by the time it's all said and done, whether it swings around a little bit or not, the price is going to, the next box is probably going to be higher than this one. And there you go. And then there's the volatility, the movement that comes out, and then you're looking for liquidity lines and things to cover on if you're in a profitable trade, so you can cover it, sell into strength. So, but that's really what you're trying to do. That's the power of getting something that's really showing momentum on the higher time. There's no guesswork here. There's no guesswork here. So when it's showing that long, that stable direction, and then you get those explosions, you just know the future of them. You know that there's a high probability that they're going to end going up, and you're just working that long side, or you're working the short side if you're below expansion. And if it's unclear, don't trade it. Just leave it alone. Okay.
Hey, Wade.
So, yeah.
Hey, can we check something out for Arturo? He put something in way back at the very beginning of the webinar. He wanted to take a look at the Aussie USD and the 15-minute into the 4-hour. Can we do that for him?
Yep. Let me switch over. We'll take a look at that, and then I see we got a request for gold. We'll probably wrap it up after that then. Okay. So Aussie USD, we've had, again, remember, close to the explosion, right? This is already, the cloud's already going. The smoke's billowing. Everyone sees it now. The fuse was lit right here, boom. So this one's getting a little bit late on the 4-hour, but let's take a look at the 15-minute. So you can see there's no trade here. No trade at all. The last explosion happened right here, and this one came fast. So, these are hard to get through. But even if you want to jump in long on these, it all comes down to risk management. If you feel strongly about your higher time frame, you could just jump in long out of the box, but understand that if it doesn't go for you and you get down back through this expansion line, then it's probably going to swim sideways and you're going to probably want to dump the trade. But the farther you get away, now your decision point is just getting farther and farther away, and it's just getting riskier and riskier. That's why you want to, if something's already gone, you want to wait for a new box. That way you have that new architecture to deal with, to control risk from. So in the market's going to set the parameters. Remember, we don't set it. We just have to interact with what we're handed. And sometimes we're handed something very nice, and sometimes it's not clear. But out of the little things that we can control, we can't control when the market moves. We can't control how big it moves. None of that is in our control. But what we can control is the quality of the opportunities that we interact with. So if you're struggling with over trading, you're struggling with, always, just having to always be in a trade, remember, no one's making you be in a trade. And if you're just constantly, I win one, I lose one, I win one, I lose one, I win. It's just activity. One well thought out, high quality setup will make up for, the if you just focused on the highest quality, most well understood setups, you're going to be way ahead than just having to be in the market all the time. And also just the mental strain that goes with being in a trade. The minute you click the button, if you're effectively managing that trade, it's mentally exhausting. So think about, the quality of the trades that you decide to interact with. Don't just waste your mental energy on anything out there. Wait for something that is really a good setup, something that has good management points, something that's not too far gone, and then really focus in on that opportunity and work that opportunity. Don't just wake up in the morning and say, hey, I'm a trader, I got to get in a trade. It's time to find a trade. No one's making you be in a trade, and money on the sidelines is not a bad thing. It's not about how many trades you can be in, it's how many quality setups that you can manage. And that's really mostly what's gonna, be the most beneficial. So yeah, I don't see anything on this one, Arturo. I would wait for it to set up, and it's, the 4 hours getting pretty far gone. I would stay long on it for the week. But you'd want to wait to get some more, more activity on the 15, just so you can have more to manage it from. And then we'll take a look at gold again on the lower time frames here.
We got a question from Rick here. Do markets start set up at the beginning of the week, as in do they respect like the weekdays, or is it random? It's pretty much random. I mean, when you saw us go through the volatility report, there's only a handful of them that really get going every week or at the beginning points. Most of them are already far gone and not really, they've already been moving or in the process of slowing down or whatever the situation might be. So, we'll look at all the majors and minors and all the pairs, and only a handful of them are actually setting up at the beginning of the week. And then some of them will, kind of play out a little bit later on. But anyway, so yeah, it's pretty much random for the most part.
Okay. John, I see your question. I could probably take a look at whatever it was, but just let me know what it was again, because we got a bunch of questions flowing through here. But if you just let me know what pair it was, and I'll take a glance at it for you. So on gold 15, again, this is something that needs to set up. There's probably going to be some good opportunity in this possibly tomorrow. The 4 hours short, we're below expansion, so just classic momentum to the short side. The real opportunity was the grade A that came out right here. This set us down in the down market. This was the first counter trend expansion, came down through, boom. Once we broke through that gate of that previous expansion, that was really, the best initial move. We're starting to pull away, and remember, the further you get away, the less and less probability, you have of the follow through in the trend. So something to think about. Right now, nothing at this moment, though. You at least want to wait till you break out of this box and get a rotation maybe up in this neighborhood, and see how that feels at the moment, see what the 4 hour looks like at that time. And remember, we're also getting late in session here. So, even if you did break out right now, I probably wouldn't recommend taking any trades on this one right now. You really want to look for setups that are coming into London, New York session, because that's where the gasoline is. That's where the volume is. It's where the institutional volume is. And, that's really what's going to drive price. So in the middle of the day, or the middle going back into the Asian sessions, there's a possibility you could run out of gasoline. And there's nothing more frustrating than taking an entry right at the end of New York, and you feel like, oh, this is a good entry. You get in and it just goes flat, and you're just like at it like a small negative or a break even, and then you just end up watching that trade for hours and hours and hours, watching it go in the money, out of the money, in the money, out of the money, not making any progress. In the meantime, you should be recovering mentally. You should be doing anything else but trading. If you're trading London, New York, you get on, you do your business on the lower time frames, find some good trades, put all your mental energy, your focus into those work hours, and then when you're done, unless you're in a trade that's hugely profitable, then you've earned the right to kind of stick with it, and you can monitor at that point. But for the most part, it's you want to try to be done at the end of New York and go do something else, anything but trading. Break that mental focus recover so that you can come back the next session mentally strong, not tired, well slept, and ready to, ready to work.
We've got a request to look at CAD yen on the month and the weekly. So John brought his question back up again. As the month is short, can we expect rotation on CAD yen weekly and monthly charts?
4-hour CAD yen's really on the move, that's for sure. So just look, that was kind of your first opportunity on the rotation. We popped up through expansion. That's the activity you're looking for, and that's set you into this long trade. So that's really, ideal. What you're the basics of what we're trying to do. But again, this one's, I know hindsight's 2020, but that's, there's no trade right now on this time frame. Now let's take a look. I'm going to throw up the daily. John, if you're trading the monthly, you're looking at the monthly, then you're probably going to want to pay more so attention to the daily than the weekly. The weekly into the monthly is, again, you're talking about, basically 4 weeks make up a month. That's getting too close to really time an entry. So usually the daily is a better indicator of what's happening on the monthly. Now, what I see on the monthly right now is that we came through this expansion, broke this low over here, and it looks like we're getting a reaction on that. This one I probably wouldn't short. And also too, if you were shorting the monthly, just going with the basic strategy, your first opportunity, we had the box up here, you broke out of the box and then rotated short. This was your first opportunity to head short right here. And this is a part of the clues that we get as we go. You see that it came through, it put you into the money pretty significantly, but then it ended up holding at this price level right here. That's your clue right here. When you don't get through and you're not making progress, that possibly you're running out of gas on your higher time frame. So in this situation, if you got in short when this candle went red, it had an opportunity to perform, it didn't. You dump the trade as it rotates along, maybe take a small profit off of it, or worst case, a break even, and then wait for more clues. But that's really, you can see we haven't made much progress since then. You're definitely only short. You're short, even if you got back in on this rotation, again, came down, tried to break the gate on this expansion, but it's just holding. We went a little further right here. You can see all the short trades. One thing, that the power of the higher time frame, because it's red, because it's under expansion, all these trades are putting you into the money. They're putting you into the money and giving you options, even though they're not turning into much. That's the power of having a strong trade placement, and that's really where you can hold your ground, rather than jumping in down here like most people do. They see it go. Oh, I got to get in. That's weak. That's much weaker trade placement than up here. So now they're like, oh, and they're going to take a much bigger loss exploring the opportunity than getting in on these higher rotations using this expansion as your reference point. So anyway, what it looks like is that if this monthly was really going to continue, then one of these would have continued. And the fact that they didn't means that we're probably going into an extended retracement on the monthly. And that's the story that's being told through here. Remember, if it was going to be a good trade, it would have been, and you had your safe trade placement up here. It's just not going. Now you even had the opportunity to take a few bucks out of here, just exploring it. But overall, the big trade is probably not going to come right now on the monthly, because the big trade, the ultimate trade, would be breaking the monthly low and going in, getting another big monthly push out of the bottom of this trend. But you can see the story being told here is not telling you that. And now we're starting to break long. We had this clear reaction point to this expansion. Now we're going long. That's a counter clue to, if you think it's going short, this is not a good sign. That's a bad clue against a short trading idea. So if that's the case, we can definitely be ranging back up into the range of these expansion levels. Which means that on a daily, trading a daily into the monthly, you're probably not going to have a whole lot going on in this pair for a while.
We go ahead and pull up the weekly real quick just to double check on that.
So now the weekly, if you're going to trade shorter time frames, like I said, the higher time frame is always your trade. That's where you're looking for the follow through. So on a monthly basis, it's not going to be too good. But now when the weekly breaks out of here over the next 2-3 weeks, if you're trading, say, the 4 hour into the weekly or the 1 hour into the weekly, there's going to be some management points that come out of breaking out of this box. Again, that's your explosion there. And if we hold above the resulting expansion line, to the long side, then there's probably a good forecasted movement on the weekly time scale from the top of this box or the expansion level to up in the neighborhood of these expansion lines. So you can pre-forecast that. Just go in the middle here, is roughly 386 pips roughly potential over the course of the next say month. And that would be, this is all falling in line. If we break out long and hold, that's more confirmation that that monthly is going to swing up long. Again, these are just ideas, forecasts. We're not going to take any kind of action. I wouldn't recommend taking any action until you start getting clues on the lower time frames that reinforce the overall idea. So, that would be kind of, what I think on that. Okay, we got one more. Hang on. One more from Andrew. Can you please look at pound yen daily into the 15? Yeah, we'll look at this last one and then we'll probably wrap it up, guys. I got lunch sitting here and it's getting cold. Let's see. Yeah, pound yen, okay. If I can find it, there it is. So you could trade the 15 into the daily. It is getting pretty separated, but you can do it because the daily is definitely going to be stable for the direction of the day. So yeah, there's an interesting thing happening right here. You're below expansion. If you're going to trade that, you got a decent management point. Keep in mind it has ran quite a bit, but you are kind of early to that rotation on the daily. This very well may turn into a possible good trade. The only thing that you got to be careful with is that we're getting out of session. So I would look for, if you're going to take the trade, it's probably in the sweet spot right now, honestly, to go long. And this is, I'm not giving trading advice. You guys take disclaimer, trade at your own risk. This is just my opinion. If you're going to go long here, my opinion would be to put your stop right here, pretty much around the low, and you're looking to immediately get up through this expansion line. And I would like to see that happen like within the next hour or so, because you are going to have to ride through probably some flat periods here. And you'd want to be up in the money so that you can afford to go through those flat parts of the day potentially. Now it could keep going. It could. Forex will do whatever it wants, but just generally you want to be careful when you're coming out of session. So I'd be looking for it to get up through the expansion. It's pretty classic. You're on the rotation, get up through expansion, hold above this line and put you into profit and ride the daily. And I would say the initial target would be this expansion level from where we're at right now. You could forecast it about 100 pips. Not a bad opportunity based off the fact of managing your risk right here and a potential 100 pip upside. Not bad. So yeah, interesting things going on right there. Just be careful about the session and the volume. If it doesn't work out, like I said, I would cut it right here. But this is one I'd probably continue to if you're trading the 15 into the daily, I would probably continue to monitor this one because it very well could turn into something, through the course of the next few days. So anyway, that's it, guys.
Hey, wait, before we wrap it up, could we do a little, give them a little info about the software update?
Yes, the software update. Well, Shane, why don't you tell him? Because he's testing. We have the licensing system done. The software is done. I'm actually doing a little tweak possibly to the expansion index. There was something that I saw on it that I thought might be more useful to change it up a little bit. So while we're doing the final testing of the licensing, I am implementing that change just for exploratory reasons. But other than that, shouldn't I'm actually expecting to get something to test on that actually by the end of the day. I need to send an email as soon as we're done here to one of my coders to see where we're at. But other than that, it's pretty much comes down to the new cloud licensing system, which was a much huger undertaking than we thought it would be. But Shane, why don't you elaborate on that where you're at? Because Shane's really taking the lead on beta testing that.
Yeah, so just to let you guys know, all of the indicators are done, but we're just working on the final tweaks of getting the licensing. It works, but we're just trying to make sure that it's a very user-friendly experience where you go in, type in your account number into the website, and then from that point, you're done. You don't need to screw around with dragging and, you know, cutting and pasting your license key every time that you want to go and open up a new chart. It's just done for at that point. So we're just, again, it's working. We're just kind of wrapping up the final user experience, you know, changing up some of the fonts and, you know, things along that line. So I'd expect we're extremely close. We're always hesitant to give an exact date just because, you know, you know, switching over as many people as we have, you know, if 10% of you have a problem, that is like going to be a really big problem on our end. So just really
Yeah.
making sure that everything is working well. And anyways, that's pretty much the update for the moment. But again, just to make it clear, it is extremely close to being done, and we're looking forward to giving it to all you guys and getting some feedback, and, you know, hoping that it helps you with your trading, especially on the risk management side.
Yeah, definitely. And like Shane said, going back, you know, the whole thing with releasing it, you know, when we released things in the past, we didn't have quite as many subscribers as we do now. So it was like if something went wrong or whatever, it wasn't too big of a deal. But now our program's gotten pretty popular. And there's you know, much bigger ramifications to having a technical issue. We just don't have the human resources to deal with something that could happen that's, you know, big, or if something stops working or whatever. You know, we have a relatively small team that works for you guys. So it's pretty crucial that we get it right the first time. So I apologize it's taken so long, but it's just, you know, it's gonna be what it's gonna be. The good news is that you guys don't, you know, we don't charge for those updates. Most people would be like, oh, you want the next latest and greatest? Well, fork out more money. So, you know, it's you guys are subscribed, you get to benefit from these things, even though it costs us a ton of money, a ton of time to and research and everything that goes into them. You guys get it passed off to you, and that's just the perks of, you know, sticking with us. So just bear with us on the timing. I know it's, you know, it's been a while, but it's important we get it right. So anyway, guys, that's pretty much it. Appreciate you guys being on the webinar. We'll plan on seeing you guys again Tuesday at 10 a.m. And you guys can look for the volatility report to come out with the final recommendations later this afternoon. And if those are your pairs that you're trading, then, you know, you should have some good insight into that. And other than that, if you guys need help, need us to review some trades or anything you got going on, you feel free. You could always send it to support@tradeats.com, and I'm more than happy to help you guys that way. Other than that, have a great morning, afternoon, evening, wherever you're at, and look forward to seeing you guys on the webinar next week. Thank you so much.